Our next guest was a big player in the redevelopment of Times Square. His family's real estate dynasty dates all the way back to 1898 when his great-grandfather bought an apartment building on East 54th right here in Manhattan. Bill Rudin is the vice chairman and CEO of Rudin Management, and now his family owns and manages millions of square feet of New York real estate. Bill, great to have you with us.
Well, it's great to be here. And my grandfather, if you walk through this building, would be totally amazed about what Mr. Bloomberg and all of you have created here.
It is quite a remarkable building. I agree. Bill, you own real estate not just in commercial, but also in residential. So I want to start there first. Between commercial and residential, what's got you more bullish?
Well, I think bullish. I'm cautiously optimistic on both fronts. And the commercial side, the stats are just out for 2010, 26 million square feet of leases signed throughout the city in New York City. And we have about a 10 million square foot portfolio, and we leased about a million feet. So we had a very good year. The rents were significantly down. We, mark to market, so to speak, but attracted great companies like the NFL.
How significantly down?
I would say the rents from their bottom are probably up 15 or 20%. They were down probably 50%. Okay. From the peak to the bottom.
So they've made up a little less than half then?
They've come back and the concessions have tightened. We were aggressive making deals last year, but the market's tightened up, and you're going to see, I think, a better 2011. But you're also seeing significant sales activity like Google downtown, which is indicative of the diversification of our economy, which has been very, very important.
You're talking about technology, you mean?
Talking about technology. We have a tenant who's signed a lease last year, and 2 weeks later, or 2 months later, excuse me, signed additional space for double their space. So you're starting to see companies grow, but that could change very quickly if governments like our governor has been working very hard in announcing his plan to right-size our government. If we don't stop the growth in taxes and rein in the cost, we're going to lose the momentum that we already have had.
But I think Governor Cuomo has said, though, that he doesn't want to raise the property taxes.
No question about it. No, he wants to put a cap on property tax.
Right, he wants to put a cap on it.
And he wants to, rein in spending, consolidate agencies, consolidate school districts, and really right-size the government like the private sector did in 2008 and 2009. State governments all across the country. You see Illinois raising their income tax. So these are important issues for business leaders. I think people are feeling confident. You have the tax, cuts that were extended. So you're seeing optimism.
But Bill, can't you say, though, that New York is somewhat resistant to any increase, not just in property taxes, but I'm just saying overall, if we did see our tax base increase, you're not really going to see companies move out of Manhattan, though, are you? We
have to be competitive on a global basis. Today you're talking about, the Chinese president coming, to the United States.
Right.
We're in a global world. We have to be competitive on all levels, whether it's education, whether it's infrastructure, whether it's technology. In New York, you feel it. You feel the energy here. You feel it downtown. You're seeing, the 10th anniversary of the Trade Center bombings coming up, but you're seeing tremendous activity downtown on the west side. Now there's a focus on the east side, and you're seeing companies move downtown, media companies, Newsweek, Daily News. You're seeing a diversification of lower Manhattan.
It sounds like activity, but what I'm hearing in the undercurrent, Bill, is just that it's fragile at this point.
Well, it's all about our business is driven by the economy.
Right.
So if you have a good economy, then jobs are created, and New York is creating jobs.
Bill, right before the break, we were talking about rents and how they're finally coming back up. They're still well below the levels we saw at the peak. For you, competing for tenants, what won't you do to get a tenant into your building?
Well, lucky for me and my family and my cousins and my sister, my children are all in the business. Our parents and our grandparents created a great platform. So we are low leverage. We're able to compete and get quality tenants. It's very important how we underwrite all of our deals. We're very conservative in how we analyze things, and that's why we didn't buy things in the mid-2000s. We didn't like those numbers. And for the city, you're starting to see a little bit of that again. People are being very, very aggressive. New York is
aggressive, you mean leverage-wise?
Well, slightly leveraged, but in terms of pricing. But you're seeing a tremendous amount of capital all over the world wants to come to New York City. And that's why in Washington, we're working with the Real Estate Roundtable to deal with double taxation for foreign investors to try to reduce reduce that to attract capital, just not to New York, but all over the country. There's a tale of two cities in this country. New York and maybe Washington and some cities in California are attracting capital. The rest of the country, there's still a huge need to focus on.
Need to get that money then, yeah.
Small businesses, medium-sized businesses, capital. So that's an issue we're working on in Washington.
Okay.
But in New York, we are attracting capital, but we are very conservative. Some of the deals that have traded in the last 6 months have, again, been very low cap rates, and
and that's going to be that's going to be your strategy from now on, no matter what, right?
Well, we've
always been like that.
We've always been low leverage,
okay.
and we want to make sure that for the next generation, we've handed off a good portfolio.
And Bill, I know I do have to mention this because your name is often associated with the St. Vincent's redevelopment project. I know for legal reasons you cannot talk about that. However, just if you could just give me a sense, though, because this is such an important project for New York, how has it, if it at all, has affected any other part of your property portfolio?
Well, we already own a piece of we had already bought one of the buildings the hospital owned, and we're in the redevelopment phase of that. I can talk about that, and that's going along very, very well.
Right.
In terms of the rest of it, we're in discussions with the hospital and trying to come up with a plan that addresses all the needs of all the people involved, all the stakeholders, the community, the creditors. So we're working on that, and hopefully we'll be able to talk about something soon.
Right. But it hasn't become a distraction for you, though.
Well, it's part of what we do every day. We work on deals and look at opportunities and analyze them and evaluate whether we want to take our time and our brand and put it on that project and make sure it's successful. And when we do that, we focus, and you can see that in our portfolio. Okay. and how we've repositioned buildings and come back and reinvested in our portfolio. That's an important thing for us, and distinguishes us, in terms of some of our competitors and how we deal with our tenants and how we deal with our buildings.
Bill, I'm afraid we've got to leave it there, but when you are ready to speak about it, will you come back on?
Absolutely.
Bill, thank you so much. Appreciate it. Bill Rudin.